The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, so come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and let's check out where things are at. We got a holiday, which makes the volume low and can make the volatility high. So right now, just picking it up and looking at every little piece, seeing what's going on. I want to go ahead first thing and check out where the the markets are trading. And you got to make sure that anytime you're trading on a holiday, that you take that into account. Sometimes you trade later, but a lot of times you can get some really good moves, sometimes some abnormal moves. Like we had a really large gap. Not a big surprise that we had the large gap considering what had happened over the Friday. Basically everything broke down. No big news in the different the announcement there in DC. And so with that we got to go, okay, so what can we do to take advantage of this? And I talked to some traders this morning. I was pretty impressed that they were going in and on some flat market areas where FX wasn't moving and stuff. They were taking advantage of just butterflies. They were going in and going, hey, I'm going to take advantage of this lack of volatility, and I'm going to make money on the neutral market. So I think that's a great idea. So going in there and just using one of the best ways, really, I think, that you can even use Nadex is to trade in neutral markets. Also, others were taking advantage of the deviation levels. We have these in here now, and they can help you sort of determine if the market has exhausted its move. We had a big move. The market pulled all the way back up to settlement, and by having the deviation levels, you would have known right there, that is settlement, unless you manually look up, because to actually know settlement price, you basically need to look it up on. You need to look it up on the exchange's site. Some platforms do a decent job at plotting the close as a settlement. If you're looking at a daily chart, not an intraday chart, but a daily chart, then they'll be pretty close. But to know if they're right on or not right on, usually you're going to need to be able to actually have that actual close number. So right now we got the S&P. After having gapping down quite a bit, is currently down just a point. We got the Nasdaq up 10.5, Russell's up 1.6, the Dow's down 8. So a little bit of a mix bag there on the indices, and nothing major to really make a move that far. It's just a simple reality that everybody's got hope. There's pessimism going in. So when that came out, hey, there's nothing that's happened over the weekend. And then all of a sudden there's a new debt talk hope. So every little piece of news is throwing the markets up and down. Okay? Oh, and then there's a little bit of hope that hey, maybe there'll actually be a solution. And there's conversations happening right now. But there was just a major down move over Sunday night. I don't know if you saw that, if you looked at it. If you're looking at future charts, of course because you see that and you take advantage of it. But if you're looking at just the stock charts, you can't really see it as well. And let's go ahead. Let's pull a chart up and just, look at this right here. We'll pull up the indices and take you on over to the S&P. There we go. And we had pretty much everything gap. And there we go. So see this, we had this major gap down. We haven't actually fully filled the S&P gap yet, but we're like a point away. And usually gaps this large do not fill. Okay. So that's it's sort of been the standard rule. I mean, my main rule is I don't want a gap larger than a deviation. But usually gaps this large do not fill. And I mean, the deviation marks were just huge today. And you can see it's pushing on up. It's almost there. It's got like a point left, and the gap is filled. So, anyways, there's been some updates on the news. We'll get to that after in the next segment here. But we'll go over. Let's check out the Russell right here. We'll check it out. And NASDAQ, by the way, out of all the indices, a little trading tip for you, has done a great job at filling its gaps really fast lately. So, one to definitely be looking at. But look over at the Russell right here, 0.5, 0.7. It ran right on up, already filled its gap. It's above it. And then we go over and we look at the NASDAQ. And we can look at that one and see where the levels are at. 1 second as that chart loads up. There it goes. And, I mean, it not only filled it, but it just flew right through it. So, man, climbing higher and higher now. So a lot of optimism feeding into the markets at this point based on the new debt deal hopes. And then if we scroll on down here to the Dow, then what we'll see is that it just filled the gap. So Dow has now filled the gap. And let's see if S&P is there now, because it wasn't there just a minute ago. But with the Dow filling it, see if the S&P is caught up. And, it's one tick away. Let's see. We got a high of, one tick away. We'll go ahead and give that one credit for a gap. I always do within 4 ticks. And I think we just got it. Gap has filled on ES. So, anyways, 4 great gap fill plays. And all of them worked out, all of them less than 1 deviation, all of them with a high reward to risk scenarios. Just a big, big move that you can take advantage of. So start looking at that, because why would you trade? Why am I talking about all these gaps? Why is that so exciting? Well, on Nadex, you can trade gaps with defined risk and without stop losses. Okay? So again, with defined risk and without stop losses. So you go in, you could buy, say, the $16.99 strike on Nadex, and it doesn't matter if it goes down, like say you buy right here, it goes down against you. You don't have to be nervous. I mean, your risk is capped, just as if you had a stop loss, but without having to have a stop trade. And so you go in here, and let's just look at like the daily binaries. We'll check out a chart on this, depending on how early you would have got in. And so we'll pull this up over here. And hold on one second for me. There we go. So we'll pull that over here. And if we go in and we look at, just say, the indice binaries, we go to the S&P 500. We'll look at the daily contracts. And again, the gap was shooting for $16.99. So let's go ahead and grab that one. And we'll go over here. We get as close as we can get about $16.98. So we'll open up that chart, okay, on this binary contract, and let's look at it and see how it, how it plays out. It's like, come on, load the chart. Let's try one more time. Sometimes it takes it a second with all the web shares going on. If that one doesn't load up, we'll try another one. But what I want to show you is how you can go in, and no matter what happens on the contract there, it will do it. But it looks like it's giving me a bit of a fit. I'll try it over here on this one. Give me 1 second. We pull that up. Almost there. Okay, $16.98, and then I'm just not getting it right now. Okay, well, I use underlying charts anyway. But you could have got in here for about $15 and bought this contract and sold it when it hit the price for about $43. Now, you could still be in it. The market's still moving higher. I usually, when a gap fills, I usually hop out because a lot of times gap fills turn around. This one could be a little bit different. We could continue to get a move higher simply because of the positive comments coming out right now on potential solutions there in D.C. So, anyways, just keep that in mind. And if you've ever traded gap fills, you know how often they do fill. And so it's a really cool trade. You have to have enough distance to have a good risk reward. And normally I'm pretty hesitant against trades this large. What I have been noticing lately is NASDAQ has been filling despite how big the gap has been. And really, more often than not, a lot of the large gaps have been filling lately. That's not normal. Usually it was more of a 50-50 on large gap fills. But lately, over the last month or so, we've been getting the gap fills with all the volatility we've been having. So, anyways, as long as you got a really good risk reward on the trade, then, you could definitely check that out as a possibility, something to look at. And let's see what we got going on as far as just, scheduled regular government news, not interventionist news, but regular government news. Today, obviously, Canada stocks are, closed down. U.S., we got a few things. Interest rate products, FX floor closed down. Globex is still open. Tonight, we're going to have the Aussie monetary policy meeting minutes coming out at 8:30. Not really a big mover usually, not unless they have something just extraordinary to say. So it might even be a great butterfly potential trade, but usually not just the biggest market mover right there at 8:30 tonight on the Aussie. Wouldn't be surprised if that thing didn't go anywhere. Looking on over at tomorrow. Okay, tomorrow we're going to have the CPI coming on up. And let's see what we got on the CPI. So give me 1 second. I'll pull up, see if I can get some stats for you. Maybe we have a trade if it's big enough. And we'll put that together. So give me 1 second here. And I got a question. I got a request over here in the den. How do you do stops on Nadex if you're trading the spreads? So, okay, we'll do that right after. Let's see. Let's get the stats for you real quick on the CPI, and we'll go into how I set my stops up over there. Right now, it's like for the UK CPI. Okay, that's going to be coming out again at 4:30. Along with it, it's going to come out the PPI input, RPI year over year, core CPI year over year, HPI year over year, and PPI output month over month. Now, most of these are not major impact, but that still, nevertheless, is 6-pound announcements at the same time. So what are the average moves on a pound dollar and pound yen? And I even have the euro pound ones going now since we're going to be, having that possibly move, but it doesn't move that far. The pound dollar, 70% of the time moves 50 pips with a little over a 70 pip average move high to low. Pound yen, only 54% of the time does it move 50 pips, but its average high to low is 80 pips. So it has a bigger move when it moves, but a lot of times it has a very small move. So just be aware that pound dollar basically has the better stats if you want to go in and do a straddle on Nadex spreads. All right, so a question comes up. How do you do a stop? Okay, well, Nadex, and this is very important for you to understand. On Nadex, everything they're limit orders. Okay, it means at this price or better. So all of your orders, if I go and I put a buy for $10 and it's at 20, it's going to fill me immediately, right? Because obviously it's, if I put a buy at 20 and it's at 10, it's going to fill me immediately because 10's a better price. So it's always going to fill you at the better price. If I put in a sell for 80 and it's at 90, it's going to fill me immediately. So for limit orders on entry, that's easy. For limit orders on take profit, that's easy. But whenever you're trying to go in and actually place a stop order, then you have to know how to do that. You need to get your stop order set up. So let me go in here and throw on just a random, and I mean completely random demo trade over here, okay? Just to show you how this is done. So if we go in and let's just choose, say, the S&P 500, and I'll just, I'll buy this contract right here. Let's see what, we got Aussie popping back up. I'm pull the US 500. There we go. And I'll just, like I said, I'm randomly grabbing a contract right now. This is a demo trade, okay? Just to teach the lesson here on how it works. And it really doesn't matter which one you're choosing. I'm just randomly grabbing one, okay? So I go up here, I grab this contract, and, let's say I put in for, 5 of them or whatever, okay? So put that in. And then when you come back, I'll show you how you would do a stop or trailing and stop. So stay tuned, and we'll be back right after this.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so we'll come on back here to the Diagnostic Trading Hour. And we're just going in to talk about a question that came in, like how do I go in and set a stop loss? And obviously I can just get out at market, but what if I want to have a stop loss? Well, you can't have a stop loss just sitting there working for you if you're trading on a contract that only has limit order ability. And there's a good reason for that, because you could really get hosed on that. So he feels the market could go down and nail your stop loss. So, but what do you do? What is the way to do that? The way to actually use a stop loss, so you don't set a stop loss, you just have one set up, is you're going to go in and you're going to create a ticket in the opposite direction. Now, I use the scanner. So if I'm going up here on the scanner, and then I click this little button right here, if you're in a actual Nadex account, then you just have to click the green button next to, let's see if yeah, like right here, this green button right here, next to the open position. So either one should work for you, okay? To me, this is just easier because it's not a big deal when you have one, but if you have like 10 positions on, it links everything. And so we go over here, and so let's say I want to get out if it hits 97, okay? Then I literally have the order up. And one of the things that I do is I pin the order to the top of my browser to make sure it's really easy, basically to, access. Because what I don't want to do is hide it behind my browser, or then it's not there anymore. And so I just have it up while I'm watching the chart. And then if it does get to that point and I want to get out, then I can get out. So that is one option, okay? And let me see here. Maybe I can find the link. I'll post it over there in the den for you. 1 second, and it's just a free program, and the name of the program, if I can find the name of it, is Extender, Filebox Extender. So, and let's see here. I'll grab that link. I'll put that in the den. Like I said, it's just a really useful, right there. So, anyways, but I had that set up. It'd be right there, and then I can place the order when the time comes. And now, a very important thing to note is, let's say, when you trade, you should be trading based on underlying markets, not on like spread charts and stuff like that. So if you're actually looking at the S&P, and you may want to put it like right here, you can see, you may want to put it off a little bit from the distance. So because I want it to act like a stop market order. So if I want to get out when the S&P hits 1697, I may want to put like 1696 right here. Remember, this is actually a limit order. So I want it to act like a stop market. So by putting it a point away, which is 10 ticks away on a US 500 spread, then automatically when I put it in, it'll submit it at 1696, fill me at the best possible price. So if the price is currently at 1697, when I hit it and I hit the button, boom, it'll automatically fill me. So I usually want to put it like 10 ticks away from where that is. Okay? And but that's really it. You just have to have a ticket open, use that free Filebox program. It's very useful, and it'll allow you to basically keep a window on top, and charts and browsers and all sorts of things like that. So that's a quick summary for how that works. It's really, it's not a complicated thing to do it, but it is one thing that, if somebody hasn't taught you how to, it can be a little bit challenging, because you're trying to figure out, okay, I want to take control of all this, and how can I make sure that I do use stops when I want to use them? Now, the other solution, which is often forgotten, okay, because I do talk about, trading, when you're trading spreads, to look at, trading as close to the market as possible, unless you're trading a volatility play. So what you'll want to do is go over here, and you can always look at, what actually might reduce my risk. So on this contract right here, I have risk down to like 1695, and so I could go and I could try to find a closer spread. Now, I chose a short-term spread, but I could find a short-term spread to hedge with. And that's what I'll often do, is I'll actually, instead of putting a stop loss in, sometimes I'll actually just add on another short-term spread that costs me like $25 or something. And because, well, if I'm willing to give up, any amount of distance, okay, like say a point or two for my stop loss, then I might as well put on a spread to go short. If it does go down, it actually could make some money in the process, and maybe it comes back up. But it eliminates me having to use a stop loss by combining a long-term and a short-term. There's no reason to hedge with a long-term spread, because you're going to pay for all the premium. But there's a great reason to hedge for a short-term spread to get really low premium with that low cost for an hour or two, which is really all you should need a stop loss for. Either the trade has worked or it hasn't for you. If it hasn't, you don't want to be in the trade anyway and move on. If it has worked for you, well, then you're trailing your stop now manually. And now you can go, well, do I want to trail my stop, or do I want to maybe get a higher spread? So that can help lock in some of that profit. All right, we'll be back right after this. We'll talk about the news and some of the things coming out of D.C. Stay right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come back here to the Diagnostic Trading Hour. So things are going back and forth. The latest updates that I've seen basically is that there is no deal. We know that, but that there's a lot of hope, et cetera, et cetera. There's a meeting at 3 o'clock today. So that's here just in an hour and a half with Reid and McConnell and Boehner and Pelosi and Obama and Biden. So those 6 are all going to come together and try to make a last-minute ditch effort to avoid the ongoing government shutdown, which who knows if they'll fix that or not. But, of course, the biggest thing being the borrowing limit. That is just a few days away. So all this is obviously affecting a lot of people in a lot of ways. But right now, the biggest news is Harry Ritt says, hey, we're closer to ending a thing, and the market runs up. And I've read a couple articles that even said that they think that the White House wasn't actually pleased that the market ran up this morning already because they wanted to use that as some pressure. That was why the market should be, scared of this not being solved. True or not, who knows? Anything. One thing I can tell you is we're back at settlement. Okay? So look at this. We're right back at settlement on the S&P. We had that big run up and then just, boom, done. All right, we also had a volume spike right there, too, often leading to a reversal. So keep that in mind. We just had a massive volume spike right there on the S&P, and that could easily lead to a reversal if the market does continue to break lower. At least could show an easy top right now in the market. Everything's in now wait and see mode on what comes out of this meeting. So basically all the fear came in, got pushed out on hope and optimism, and now it's wait-and-see mode. And that's where we're at. So be careful right now when you're trading, just because there may not be a whole lot of volatility in the indices. You don't want to get chopped up, right there. So let's see. We got the market. Now, the NASDAQ, it had a nice run right there. And you can see its settlement was actually a little bit off the way that it finally settled out. So it's, but it's still above settlement. And it had a volatility spike as well. And notice it has not yet broken another high since that volume spike right there. And let's go in. Let's look at, just keep an eye on these. Look at the Russell, and we'll take a look at the Dow again. And just wanted to see, we're getting these volume spikes across the board, which are a pretty solid indication usually that the market is done running and going to chill out. So at the very least, tighten your stops, okay? Because every one of the indices has had a volume spike. And so I'm not saying the market's just going to go down. I'm saying the market probably just going to be wait and see for the next hour and a half. Might be a great butterfly time, like for 2 o'clock, 3 o'clock expiration, okay? And let's go. Let's see what's happened over here in some of the currency pairs as well. And let's see. Roll this on up. And we got the euro. So bring that up. By the way, there ought to be some decent implied volatility coming into the market just as everything is sort of worrying about it. But check out this lack of movement right here. Let me, hold on. Update that chart. And like that, that's a lot of lack of movement. But let's see. I don't have my connection. Had to re-update that. Looks like it went down for a second. Okay. So, gotta love internet outages. Big storms out here. But, opening up the euro dollar, I just want to see if we can look at any possible plays on this for this half hour, because we're seeing, like I said, just a lot of flat markets. And so if you wanted to look for a potential binary butterfly, pardon me, as you can see right over here, we got the market up 0.7, down 0.5. Not really getting totally a volume spike here yet. So we'll see if that's going to turn around. I wouldn't be surprised if it did turn around before the end of the day here. But we got euro dollar. Let's go ahead and check out the pound. I just want to see if there's a really good looking potential play. And it might just be the play, it might just be the indices, as the markets are just sitting and waiting right now on everything to move. So we might just decide to go ahead and just sit over on the indices instead of let the often I'll use FX. But okay, so let's check it out. Let's check out indices for potential play. Let me close out this example trade I did here as a lesson. Gotta let it close, open up, there we go. Yeah, there we go. Just close it out. All right, and so what that'll do is that'll shut that position down. And let's check out our indices. And what is one of the biggest benefits of the scanner is you can select all indices at one time, instead of having to go over to the Nadex platform and click on, literally 12 different screens to see all this information. And what we're going to do, though, is we're going to look at a potential possible binary butterfly play. So if we go over here, we're going to select our indices. We're going to get rid of crude, and we're going to change our risk 65 to 95. Okay? And let's bring this on down. Let's just look at the next, we'll say hour, and see if we see anything that looks really good on all four indices combined. Now, we need both sides. We need to see if there's enough there. So we're going to keep an eye on it right now. I'm not seeing anything that's just massively great. Let's see. You keep an eye on this 3240, 3235 as potential trades. I need a little bit more premium in one of them. I'd like to get $15 on both sides. So that means buy for 85, sell for 15 is what I'm looking for. Getting a little bit better over here on the small caps. So, that's oscillating. That might be a little bit more potential. And so let me pull up the small cap. We'll look at that. Now, it's fluctuating a lot. So let's go in and look at the actual contract and see if we think it's a good trade, okay? So you don't just want to randomly buy it off the binary chain. You actually want to look at it and go, is this a good idea? Don't just... It's amazing people will literally just trade off of the binary chain itself. So, and obviously that's not advisable at all. But let's see. Right now, it's looking like you have a 1086.2. Yeah, that's still pretty close for just for having an entire, 15, 20 minutes left. I'd be a little nervous about that on a Russell. And then 1084.2. Yeah, still. So there's really almost no implied volatility in here at all. which does lead to another potential type of trade. Okay? So the other type of trade that you can do, if you see that they're close enough, is you can go in sometimes and you can get these trades on really, really cheap. Okay? And it sounds sort of funny, but 20 minutes to go, you put down $10 or $20, you could actually have a pretty decent trade. I mean, 1086.2, I can go in here, I can buy this thing for, $29, and then, filled, it's already in, and then I go in and I put an order to sell it back. Okay? So I'll sell that order back for, say, 43, whatever. And I mean, this thing opens at like 5, 10, 15, 20. So as it's rising up, then now I submit that as a sell order to sell back the contract. So I go in and just take profit on very small fluctuations in price. Okay? Doesn't take a whole lot. And again, you just go in there and place your take profit order, and it's working for you. If this moves up literally just a few more ticks, then the order's filled and we've taken profit on, the trade. Okay? So hopefully that makes sense. If you haven't traded these before, then you'll start understanding, or if you have traded these before, you'll start to understand the strategy. This is basically the opposite of premium collection. Okay? And I don't mean like in the sense of being like just totally opposite. I mean in the sense of we're going for very low risk, very high payout. Now 43 is pretty close. A lot of times I'll go for like 60 or 80. So for like a really good payout. And to adjust that, you literally just go up here and just change this right here. Just click this little button, this little wrench, and what it'll do is it'll open up the ticket for you, so that way you can put in an order in the opposite direction. So, and it auto-fills it in for you. That's the biggest benefit. So if you want to see how to do that, again, just click on that little wrench right there, and it'll allow you to amend the order. So right here, so let's say you want to go for 60. Why would I say 60? Well, because that's honestly just a little bit on the other side of 1086.2. So I'm going to change that now. I bought for 29. I can change that to 60. I hit amend order, and literally just these small fluctuations allow me to take advantage of very high profit potential, very low risk trades. The other big advantage with this type of trade is you don't have to have a stop loss because your risk is so much lower. And like you're risking 10, 5, 10, 20, maybe $30 on the high side. On the trade, it'd be about $30. And what I like to do, especially now, is I'll go in like the last 5 or 10 minutes, and I'll look for ones that are just really, really close, a few ticks, ones that you'd be really nervous about doing a premium collection trade on, and I'll just do the opposite. So instead of doing the premium collection trade, I'll go in and I'll buy it back instead of like say sell it for premium collection, I'll buy it. And so if it only moves a few ticks, then I go in and I grab a nice, easy profit. Okay? So anyways, this is just one example of how to trade these contracts. But it's a pretty cool one, and as you learn how to do this, then you'll be able to go in and really take some money out of the market. To me, it's one of the easiest ways, and I started embracing. I showed some of the traders this last week, and they got really excited about it, and put on some nice profitable trades. And again, what we're doing is, maybe in the last half hour, even in the last 5 minutes or so, especially in the last 5 minutes, because you can get them like just a few ticks away. I mean, even this trade, it's. Right now, where are we at? We're at 1086, 1085.7. So in the underlying, and this is at 1086.2. So, what do we got? I mean, that's only 3, 4, 5, that's only 5 ticks away. And that's with 15 minutes to go. Okay? So as it gets up there, then, that could easily be a profitable trade right now. And it'll oscillate a little bit, but if it just busts that point by a few ticks, then we're in, done, and profitable. So we're at 1086 now, and it's moving on up. See? So pretty simple trade. Just sort of going with the trend, very low risk. And, if you see it's not working out for you, especially if you buy like at 10 or 20, then you actually can work with it a little bit, and you'll have some time because there's so much premium if it's really close right there at the end of expiration. But, we're just within ticks and making some money on the trade. So, pretty simple. Now we're at 1086.1, and we've actually already hit our 1086.2. So, there's a little profit in there, but just learn to play with those. And to do a summary for you again, what I'm going to do on these, I'm going to go in, it's sort of funny, I look for premium collection trades. I know I can put 5 to 35, but for some reason, just the way I like to look at them, I look for premium collection trades, and I'll look for really cheap ones, and then I'll see if they're really close. So, like right here, here's 15 to 10 on the Dow, and I'll pull up the Dow ticket, and I'll go, well, how close is that? Okay, that's 10 ticks away. So, that's when I could consider if the market keeps moving up here over the next 14 minutes. I have a trade I can put on. I put the order on. It's $17. Then I go in and I put a sell to sell the contract for, 60 on there, and then, I have the entire trade done. So it's pretty simple. If you haven't done it before, then all you got to do is hop in and demo trade this. Obviously, don't go in and place trades that you don't understand. But I mean, the whole point of a demo account is so you can learn how to do this. So again, you can go in. I'll sort of walk you through it. So let's say you think the market's going to edge up a little bit more here. So we go open this ticket up. Okay. Now I need to make sure I put a buy. So buy, and I can buy this for $8.50 right now. All right. So let's put in a live order. There we go. Okay, we're in. Okay. So we close that out. Now this is if we actually assume the Dow's going to go up. And these are just really, really low risk trades. And then I'll go over here and I'll put in a sell. Now I could change this target sell to say, 43. I mean, if I got it for $8.50, that's a massive return. And it sounds big, but I mean, it's really not that big of a move. So you put that in there, close it, let it do its thing. And the more you play with these, the more you'll understand them. And here's the benefit, is the reward is so much higher, okay, compared to the risk, that this is one thing you have to be aware of. See, on premium collection, you'll win more often. But, if you lose, it'll wipe out, it could wipe out one or it could wipe out 2, 3, 4 trades, depending on how well you manage your risk. On these trades, if you lose on it, then, one trade can literally cover up like 2 or 3 losses. So you could actually be a pretty bad trader and actually still come out net profitable at the end. So, anyway, something to try it out with demo. And then when you're ready to go live, I'm going to tell you, try it out with like a contract. Go really small. And, don't just do them one time and go, it didn't work. Go in there and, go do it over a variety of expiration times, a variety of instruments. Look for markets that are moving, semi-fast, in the direction that you're looking for the market to go. And, play with it. You'll see, you'll basically see what I'm saying to you right now. And, anyway, so let's go ahead and let's check out what other news we have coming up for the rest of the week. And we'll keep those up. And, again, you can always reverse this. You can go in and you can go, I think it's going to go down. And you can find, good trades that might be great, like, say, 1084.2. If you think the market's going to start dropping, you can go in and you can reverse it. You can strangle these things, like, in the last minutes, okay? So if the market does decide to drop there at the last second, then you could have a really profitable trade as well, going both directions. So I might say, either the market's going to go below 1084 or above, 1086, that type thing. And if it does either one, then I could be profitable on the trade. So you can strangle them, you can go directional on them, but you can do them with really low risk. And this is really the original idea. I think the most basic idea behind Nadex is not using stop losses. And this is you can almost say a less advanced method because you're not using stops. Now it's out of the money, so the market has to move. Okay? So you are really putting your, everything in the market moving. So the market has to move. And if it doesn't, then the trade will lose. But like a premium collection, you don't want it to move. This one, you do want it to move, maybe 5 or 10 ticks at most. And that's how close you want it. You want it really close. Like I said, 5 ticks at most for those 10 trading, high profitability trades. All right, we'll come back. We'll check out a few more news announcements. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. At Hertz Global, as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
We went both directions on that. So we had the small cap, so what the contract was that right there is at 1086.2. Remember, so you go both directions. So we had 1086.2, but we also went in and we were looking at a 1084.2. And so by doing both, by putting like $10 on both sides, let's see, let me get to the actual fill prices. So, okay, so we got a take profit filled on the 1084.2 right there. So, yep, so that one's filled at $57. So when it dropped down to it, instantly it filled us. We're done, we're out of the trade, and that took the profit on the short side. Now, by the way, if it does go back up in the next 5 minutes, we could actually take profit on the long side as well. So it's pretty cool. You put these orders in. If you say you can get $20 on both sides combined, like $10 on each side, they're really close. You set a take profit when you buy. Let's say if you buy at 10, you set to sell at 43. If you sell it, let's say 90, set a take profit to buy back at 57. If it oscillates, it can hit both. If it hits either one, you've still made well over 100% return on your risk. So very, very simple trade. And it's just something you got to start playing with and start demo trading with it. But you can go in. And there's a lot of ways to do it. The closer I get, the more I'll look. The closer I get to an expiration, the more I'll start looking at something that may be really, really close. So if we go in like right now, we got just literally a few minutes left on the Russell, right? So I'll go over here on the Russell on this. And by the way, if you do multiple markets, that obviously can add to an advantage. If it's confusing you to do the 65 to 95, like for butterflies and premium collection, you're just doing the trend trading expiration trend trading, let's do 5 to 35 on your risk. And go down here and you can go, okay, can I see anything? Well, there's a 1083.2 for $95, and now the 1083 or 1084.2 is now $21. Okay, so just to show you the example, if you were literally going to go in and do a straddle with 4 minutes to go on the clock, is it possible the market could move up, a few ticks? So if you went in and did this trade, I'll just do like I said, do this light, while you're experimenting with it, while you're learning, but you can go in there, you can place that order, and then you go over here, you can place this order, and if the market, literally the next, and this is, we got 4 minutes to go, you'd be pretty nervous. I guarantee you, if you were doing this as a trend trade, you'd be very, very nervous, because basically you only have 3 ticks for the thing to go against you. Okay? So we went in, we placed our trade now, right? And so we got the small cap contract on there. There it goes. It's flying up. So you just take it off. So take the trade off and take your profit, and you're good because it already hit the 43 on the buy. So, or you could leave it on if you wanted to, but if you leave it on to expiration, you're really basically saying, hey, I think this thing is going to, stay there all the way. Let me see here. Let me show this to you. So if you leave it all the way, then, you're risking giving all the profit back. So, you go in here, just update this, and place an order to get out of it. Done. So we've taken our profit, on that small cap one right there as the market bounced back up. Put in a simple $20 risk. I got out at, looks like $53 on that contract. I have another one over here on the pound yen I did, where I went in and let's see what I bought it at $10.50. I'm up $13 on this contract right now. Do I want to stay in this trade or not? I might want to go ahead and close out of it. We're so close. I might as well just take the profit and move on the trade. So that way I don't have to, I basically don't have to give up profit that I have, because the profit that I made on the one that I sold more than hedges the one that I bought. So anyway, these, like I said, these are really simple trades. We just did a handful of live trades right in front of you there, and some of them worth it. I think it's probably worth your time. We're checking out. So very short period of time. If you can make 20, 30, $40 an hour and just multiply the contracts, would that be worth it to you? Probably would. So anyways, check it out and let me know what you think. And I will see you tomorrow right here on the Diagnostic Trading Hour.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.